or something. So the update right now, as of Wednesday, May the 14th, 2025, on the Bitcoin and altcoin markets. If you were looking at the markets yesterday, you'll see they played out precisely as the VEPs were indicating. Once again, if you're trading the VEPs, right, there's practically no surprise when the assets do what they do. I mean, yes, sometimes, quote unquote, surprising things happen because of a lot of randomness, right? But short of that, even when things are random, you kind of expect them to go up, down, or sideways based on the information, the other information of the leading information. Now, of course, when there's a lot of randomness, then of course it can go up, down, or sideways, without even a moment's notice, right? When it's in a trending move, it typically is a little bit more predictable, right? Which is why you look for those trending moves to enter and exit if you want to take a kind of an easier route. Now, does that mean that you can only trade trending moves? No, of course you can trade random walks too, right? And using the entropy indicator that we have at Alpha Trading, whether it's in a trending move or a random walk, the fact is, when entropy is expanding or contracting, based on the correlation that it has with either the alpha squared entropy power percentile or the Shannon entropy percentage, you can correlate that entropy and, just like volatility, determine the tendency of the probability of the move, up, down, and sideways. And it works very, very well. That goes for whether or not the asset is in a random walk or a trending move, by the way, right? So that's something very interesting about that. Because yes, when it's in a trending move, it tends to stay in that trending move until it's not. Right? And when it's in a random walk, it's a random walk until it's not. However, there's still something quite predictable about the tendency of the probable direction, which is one of the remarkable things about the entropy. And by the way, you saw yesterday a whole lot of mean reversions completed, just like they did the day before and the day before that. I mean, every day you have mean reversions completing, but yesterday there were a lot of them completing on like the 4-hour time frame, I think 2 days ago. And then they completed more of them. They did, like, a lot of assets completed a mean reversion on one candle, and then they began a mean reversion after the next candle and completed the next one again within another candle or two. Like, there were a lot of distributions and mean reversions happening, even like on the 4-hour time frame. It's crazy. Like, look at Bitcoin on the 4-hour. It's crazy what it did. Right? But it's crazy, but not crazy. It's just maths. Right? So what happened is actually totally normal and to be expected, frankly. Let me get you a little bit of feed on the crunchy leaves. Tell me if you like the crunchy leaves in the comments. Do you prefer the crunchy leaves, or do you prefer seeing, like, the lovely fields here? See the birds feeding in the fields? There you go. You see the birds feeding in the fields, the well harvested fields. There you go. You see them? They were just feasting. Those seem to be pigeons, yes. A local variety out here in northern Israel. Anyway, so yeah, leave me a comment if you prefer seeing pigeons feasting in the fields, or you prefer seeing and hearing crunchy leaves of the local tree zone. Anyway, so yeah, a lot of mean reversions happened. A lot of distributions happened again. And then a lot of mean reversions followed swiftly afterwards. And if you listened to YouTube Jimmy or any of those YouTube Jimmies, you would have thought yesterday, we're going all in. Load up the cannons. It's time for the explosive ATH move. All time high on the way. Get your positions in if you haven't already. Buy, right? And if you ever notice their screens, they're always bragging about their $1 million positions and their $10 million positions. And when they show you their screens sometimes with their positions, if you ever pause those screens, right? And keep in mind, a lot of those screens are also fake in a variety of ways. Like they can have multiple accounts that look identical and they're basically using virtual money from the exchanges that let them do that. They have an agreement with. But even if you say, okay, show me a real one, okay, and you show me a real one, and you pause it, you'll notice they have like use 7x leverage, 5x leverage, 10x leverage, 25, 27. Saw one on the 27x leverage yesterday. He's bragging about his P&L or whatever. And if you look at the unrealized P&L, it's whatever it's at, $1 million, $5 million, $50,000, $25,000. And then you look at the realized P&L, and the realized P&Ls are all in the negative significantly. Meaning they've actually lost money on the trades. Even if their unrealized P&L are significantly in profit, and they might very well be, they're using massive leverage, which means if the asset turns around even 1% or 2%, they lose enormous pieces of that profit. And if they're using something like 27x leverage on a shitcoin, which a lot of them do, guess what happens if it moves 3% in the other direction? It doesn't have to move the whole 3.7%, right? Because there's network fees, there's trading fees, there's exchange fees, there's liquidation fees. So they get wrecked really quickly. If you have a 27x leverage position and the asset dips even a smidgen, you're talking about shitcoins that move 3% on the 15-minute candle sometimes. Easily, right? Easily. Especially because they're relatively low liquid coins. That's why people think they're fun to trade. Because you get to be the big fish in the little pond kind of thing. Right? If you have a bunch of liquidity. And so you put on your $1 million position or your $50,000 position or whatever the hell it can support. Suddenly you're a big fish. Well, guess what happens when you're a big fish and you try to cash out of a small pond? Guess what there isn't in a small pond? A lot of water, right? And what is water? Liquid. What is liquid? It's the same as money. Liquidity. It's literally the liquidity of the stream of the market, right? The pool, the money pool. It's all the same thing. Money is like water when it comes to the markets. Okay? You don't want to run out of any. You don't want you don't want the water to go dry. You don't want the well to go dry. You don't want the money pool to go dry either. Well, when you're trading 27x positions and you're bragging about it to your traders and telling them to follow you and copy your trades after you've already done those moves, even if you told them, copy my move right now, on a video that you posted after the fact, when they obviously cannot copy your move right now, because the asset will have moved by the time you finished that sentence, let alone posted the video, right? So how are they exactly supposed to copy your move? It's a complete scam, and it's a way to just get people to deposit onto their affiliate links, right? That's why people do that, right? They say, hey, click my link for whatever, silly bonus or whatever they say. That's a scam, right? No, it's not a scam in that it's illegitimate or illegal. It's not. But they're scamming you when they tell you that they're, you know, doing their thing because of their trading. They're not. They're doing their thing because you're clicking their links. They're doing their thing because you keep feeding their machine. And the more you keep feeding their machine, the more they're going to keep doing their thing. And by feeding their machine, I mean, you are contributing to their success more than trading is. How do I know that? Well, if you think that they're not getting paid huge amounts of Bitcoins, they are. Right? They're getting paid by you clicking and depositing. Every time you deposit, they get like half of what you deposit, effectively, even 60%. Right? When you trade and you lose, right, they're making like 60% of what you're losing. They're making literally more than the house. Now, how does the house make money doing that? Well, the house has a lot of affiliates that bring them fresh blood. So yeah, they might be paying the best affiliates 60%, and they pay the average ones anywhere from 20 to 50%, even the tiny ones, right? But so they're still making at least half on everybody else. And yeah, the best ones, they pay a little bit more. They don't mind because the best ones bring them tremendous volume that pays all the bills. And each individual, it's still not, that's an affiliate, is still not bringing them more than the house is collecting in total. So they're still able to collect more, obviously, because they're running the exchange. And you also have to remember, right, that those affiliate deals only last for about a year. Meaning, if you sign up through an affiliate, the person you sign up through gets a commission for like at most a year. In some cases, it's 30 days, 60 days, 90 days, 6 months. But in many cases, it's a year. Now, if you repeatedly sign up through their affiliate links year after year, it's a different, or whenever they promote a new thing, then sure, you can take advantage of their affiliate deals or whatever. But you're not going to create multiple accounts on whatever exchange through the same affiliate, right? Usually, some places let you do that. Some places even still encourage you to do that. But most places want you to have one account and that you verify it nowadays. Not every place requires you to verify, especially if you have like a tiny account. But usually to withdraw anything, they will make you have a verified account. You might not be required to self-identify to deposit and to trade, obviously. They're like, oh yeah, you want to give us your money without telling us who you are? No problem. Oh, but you want to take your money out? No. And you have to show us your ID. All right, so you got to read the rules. If you don't want to ID yourself, best not to use a centralized exchange, and best even on a decentralized exchange to know the rules, because a lot of them are also built by centralized exchanges, and so they still require you, right, to ID yourself, which again, for most people is not a problem, but there are some people that is a problem for, and they have to figure out how to deal with that one way or the other. Either don't use that exchange, or if it's important that you do use that exchange for some reason, find some way to do it. And there are lots of ways you can do things like that. And there's also lots of other decentralized systems where you don't need to ID yourself. Maybe they're not as popular, or maybe they're not as, whatever. But they're still usable. And you can still trade on them. So, anyway, that's that. I just want to give you a bit of a heads up. What's the market likely to do today? As always, the market is likely to run with the VEPs today. No different today than any other day. Right? Look at the CDR. Is it tight? Has it been tested? Are you likely to see more tests? Are there some assets where it hasn't tested yet? What's the daily direction? If it's tested the daily mean, right, middle of the CDR, and it's gone in a particular direction from there already, right, it's very likely going to have a nice move relative to the time frame, at some point in that direction. And look at the daily levels, right? The daily, if you will, the daily 68.3 ranges and the daily buy and sell levels of the VRE. All right, look at the daily 68.3 ranges on Laplace and on normal distribution. Look at them both. Are they likely to both continue doing the same thing? Are we likely to see more movement to the upside? What's the daily entropy showing you? Is it in a trend or a random walk? What's the direction predictor telling you? Right? What's the returns oscillator telling you? All these things are giving you information, leading information, right? What's the volatility, of course, telling you? That's the primary thing. The volatility is telling you, generally speaking, things are going up, then things are probably going up. Of course, you check on it throughout the day. But, and while you're trading, you keep an eye on those things actively, because these things actively change. That's why we look at low time frames, right? But to just try to listen to some YouTube Jimmy tell you, oh yeah, that's only going up from here, right? That's a huge mistake. Right? You don't want to do that. You want to listen to the maths, not the madmen. Because the madmen will lie to you. They will tell you anything to get you to click on their stupid links. Right? Whereas the real traders who trade the actual VEPs typically don't really care if you listen or not. Like, I don't care if you listen to me about is that that there are better ways to trade. But like information I'm giving you, I'm telling you about the VEPs. The VEPs isn't some random magic thing, right? It's the VEPs. Oh, hello, kittens. Hello. The VEPs is they are quite funny. Animals. Every time I see a kitten, I think of a new trader who just had to open up TradingView for the first time. Anyway, it's gonna do it for now, folks. Wish you guys well. Hope you're all doing well. And yeah, that's it for now. Take care. Peace. And yeah, that's it for now.